Hello and welcome to the sixth episode of Meet East Capital. We try to give our perspective on emerging markets and frontier markets during these regular webinars. It is the 23rd of January today. My name is Grapengiesser. I'm the CIO of East Capital. And together with me today, I have David Nicholls, who is a PM for our global emerging market strategy.
Yes, hello everyone. So when we were writing our 2024 outlook, we hypothesized that 2024 would be an alpha year, so sort of slightly more benign in terms of macro, not this sort of obsessive focus on rates and monetary policy that was really driving a lot of the markets in 2021 to 2023. And to some extent that's worked out actually, particularly for East Capital. So Jacob, maybe you start just by taking us through sort of how these capital funds did in 2024.
Yeah, thanks, David. So to be honest, I think it was one of our best, if not the best year in terms of alpha generation for East Capital, and that's over a period of 25 years. So we had a great year. Admittedly, it was a lot of hard work, I shall say. It was not an easy year. I think markets were a bit all over the place, and we needed to be quite flexible and dynamic how we worked and approached different markets. But as you can see on the slide here, so our frontier markets fund had the best alpha with a bit more than 11%. The Eastern European strategies also did well, 6-7% alpha. And then for the global emerging market strategy, it was 4.8% net alpha. And finally, our China fund had a 1% alpha. But overall, I think it was really a great year. But David, how are markets doing during the year?
Yeah, exactly. And I think, Jacob, you hit the nail on the head. It was a really, really varied year in terms of market returns. And I think if you look at this slide, you can see the numbers are absolutely all over the place. And I think that the most thing that confirms is something we've been saying for a while, is that it's a bit wrong to think of emerging markets as just one sort of homogenous asset class. And actually, it's full of a huge range of countries with at very different points in their cycles, very different market structures, market drivers. And so you really do need to take a bit of a sort of individual approach to each of these markets. And that's something that, as Jacob said, worked out very well for us in the year. You think about absolute returns, 8% return for emerging markets. Main driver, of course, Taiwan, driven by the AI theme. As we know, they make all of NVIDIA's sort of advanced AI chips and things like that. But there's a lot of other sort of pockets of excitement as well. And I'd say probably the one that will probably surprise people most is China, where the MSCI China returns 19.7%, which is actually better return than you got in developed markets as a whole. So Jacob, yeah, you're based in China, spent a lot of time looking at it. Just take us through what happened in China in Q4 in 2024, and then how does that form your sort of outlook and positioning going into 2025?
Yes, I live in China. Maybe that's a good thing because China is very, very complicated now. I think during my 20 plus years of working with emerging market investments, I never seen anything as kind of complex and shifting and difficult as China today. There have been a lot of stimulus measures announced in China. As you can see on the slide, we have just listed them, right? But I think the point is not about the exact numbers. I think the point is that the Chinese government really wants to fix the economy, and they are basically plugging a lot of holes for the local governments, but then also trying to stimulate the consumer. That will take time. I think we'll only see the consumer confidence returning by the end of the year. So positioning in China has been both offensive and defensive, where we try to, have holdings exposed to a better economy. At the same time, we do have Trump, and we do have certain risks in terms of tariffs, etc. So we also have a relatively conservative positioning. Maybe it's hard to explain, but I think we will do both. We will do well in both scenarios, both if there's more of a trade war and actually if the Chinese economy recovers.
So yeah, maybe I'll talk a bit more about sort of the performance of the funds, and particularly the emerging market funds that I spend most of my time on. And Yeah, I think what we're most proud of in terms of sort of alpha generation, it really delivered across most countries we invest into, which is it's fantastic, of course. But the main alpha driver though was India, and I think India is a fascinating market. It's probably the most classic emerging market that you can imagine in terms of sort of young growing population, structural growth, a blossoming local retail investor scene. So there's money coming in locally, not just internationally. Which set the scene for some good performance. It's there, which is fantastic. It's going through a bit of a wobble at the moment in terms of India, driven by some cyclical factors, but I think the long-term story very, very much remains intact. I think a lot of people ask us about themes as well, the kind of themes that we look at and we've looked at. Probably one of the main themes from an alpha generation point of view in 2024 was this idea of global electrification. So when we really scoured the whole of emerging markets, looking across value chains to see where we could find those sort of the tightest parts of each of those chains. And I think that the most exciting name was a Korean transformer producer. So transformers are vital for AI data centers and renewables and things like that. It was called Hyundai Electric, up almost 300% in US dollar terms. So a really great investment. But there's a lot of examples. For example, WEG, which we call the Siemens of emerging markets, based in Brazil, and an interesting one in that it's actually a beneficiary from a weakening currency. And obviously Brazil had a very difficult year, but actually this company benefited from that because they're exporting, a lot of their products are priced in dollars, but obviously they cost a lot in the local currency in Brazil. So yeah, that's a sort of short snapshot. But yeah, Jacob, our Frontier Fund had a pretty special year in December, celebrating its 10th birthday. Can you sort of put those 10 years into context in a minute or so?
Yeah. So the fund celebrated 10 years. It has delivered really good alpha, both versus emerging markets and frontier market index. So versus the emerging market index, it delivered 70% alpha, versus the frontier market index 90% alpha, 90. So really, really spectacular results, and we're super proud and happy about that. For last year, I showed you it was a bit more than 11% alpha, right? And it was a number of countries such as Vietnam, Nigeria, etc., that were contributing to the great performance of last year. David, we also had a special anniversary for Eastern Europe, more from historic point of view.
Yes, exactly. I think a bit overlooked actually. It was the 35th anniversary of the fall of the Berlin Wall in Q4, and really that was something that catalyzed the formation of East Capital in 1997. And 27 years later, we're still as enthusiastic about Eastern Europe as we were all those years ago. And I think if you look at the market as a whole, in a world where valuations are either stretched and expensive, or the countries are going through some sort of economic stress or political stress or something like that, I think Eastern Europe really stands out as being pretty good from a macro point of view and very cheap versus historical standards. So, for example, the region as a whole trades around 7 times PE, earnings growth of 20%, 6% dividend yield. So it does look attractive, and particularly if you look at it versus how it used to trade compared to emerging markets, for example. And of course, the main reason for that is the war in Ukraine. And so a major trigger for the region in terms of re-rating would be some sort of comprehensive peace deal, which, as you're well aware, sort of Trump is pushing quite hard for. So it's definitely something to look out for there. But yeah, I think, Jacob, we did an outlook, a specific outlook webinar that is available now on our social media. But if you were to sort of briefly summarize how we see 2025 shaping up for emerging and frontier markets, what would you say?
Yeah, so a lot of the uncertainty is in the price, right? I mean, everyone knows that Trump will possibly put tariffs on China. It's no news for US investors, it's certainly no news for Chinese investors, and that's obviously where I spend my time, right? So a lot of the markets do look very cheap. I think especially Latin America, actually, especially Brazil, it looks very cheap. As you can see in this chart, it's close to all-time lows in terms of valuation of the market. The Chinese market is probably at its average or close to its average. But the main point is probably, what will US investors do, and will they shift part of their allocation from the US market to other areas of growth? And emerging market is one of those, right? We expect the the index to grow earnings by 14% for this year, our fund around 18%. So I think it's probably realistic to expect that you can get a return somewhere along the lines of the earnings growth.
Exactly. Thank you very much. And thank you everyone for listening. You'll be able to find our written version of the CIO newsletter on all of our on our website. And yeah, wish you a good day.